Let us conclude what we have learnt in this week. This week we spoke about balance sheet and the elements of balance sheet in greater detail. We started with assets and then we moved on to liabilities and equity. Under assets, we saw that we broke down the assets into two parts, the non-current assets and the current assets. We further looked at non-current assets, basically long-term assets in the business. Non-current assets are broken into property, plant and equipment, intangible assets and other non-current assets. We then moved into looking at current assets. Current assets, we said, are short-term assets and they are further broken into different elements. We started with inventory, we moved on to receivables and we looked at cash and cash equivalents. We also saw some trading securities or financial assets that are part of current assets. After discussing current assets, we moved to the other side of the balance sheet that looked at the funding of these assets. And we call them as equity and liabilities. And as I said, it doesn't matter whether we discuss liability first or equity first, because that depends on the format and the format depends on different countries. We started with looking at liabilities, and liabilities we broke into non-current liabilities and current liabilities. We then moved into equity and we again broke equity into two parts, starting with share capital, also called as common stock, and we moved into retained earnings or the amount that is retained in the business. This concludes our discussion on the balance sheet as we move towards looking at the income statement next week in greater detail. Income statement is a very important document because the company's management, the investors, employees and all other stakeholders are constantly looking at how the company is performing in terms of its earnings. And this is very important statement because lot of adjustments happens in this area and we need to look at it very carefully in the next week. Thank you.